Big things often have a small and humble beginning. Take the example of some of the most successful companies. One of the leading IT consulting firms in the world today was started with a meager initial capital of rupees 10,000. One of the most famous restaurant chains today, with 1,350 restaurants across 288 cities, which promises to deliver your food in 30 minutes, started off with just a single restaurant in 1996. Or take, for instance, this leading research-driven pharma company, which has commercialized over 60 products since its inception, which started its journey in 2006 with a small R&D unit in Hyderabad. Do you know what's common in them? They are filled with immense energy, relentless persistence, and an insatiable hunger for growth. This is the core foundation of small cap companies.
Small cap space is filled with countless new and emerging business models. They are present where large and mid-cap players have limited presence and therefore have more sectoral opportunities than the established players. Their main focus is to utilize the potential in the niche segment that may offer enormous growth possibilities. Out of the companies listed on the exchange, categorized on the basis of market capitalization, large caps constitute for top 100 and the next 150 make up the mid-cap companies. There is a large universe of small cap companies ranked below 250, present across sectors which are under-researched, under-owned, and carry great potential to scale up. All these factors contribute towards small caps having the potential to be tomorrow's winners. With the current valuations of small caps near long-term averages on price-to-book metric, we believe they have the potential to grow at faster rate as the economy recovers. History shows us that when economic growth picks up, the small caps tend to bounce back more fiercely post-market corrections as they revert to their mean over time.
But with the possibility to earn higher returns comes the risk of higher volatility and also lower liquidity as compared to the large and mid-cap peers. And few of the small businesses could also face the risk of business continuity and management quality. This makes it far more difficult to select quality small cap stocks. That's why you need the right stock selection process and a sound risk management framework to create wealth and mitigate risk in the long run. So why not let the expert do the stock picking for you and carefully separate the wheat from the chaff?
UTI Mutual Fund's proprietary in-house core alpha strategy and in-depth research methodology helps us identify quality stocks. This strategy helps to spot companies that have scalable business models, are run by quality management, and generate high return on invested capital. We also seek out companies that are undergoing a turnaround and hence create the possibility of mean reversion in valuations.
Our robust risk management framework helps to identify high-quality stocks and avoid the poor ones based on in-depth research methodology. The framework also seeks to maintain judicious diversification across stocks and sectors. As part of the 360-degree risk assessment framework, we also assess the portfolio continuously to identify any risk whatsoever. This framework is used across all our products.
And with the launch of the UTI Small Cap Fund, we seek to fill our product bouquet and help investors tap the potential of the companies in the small cap universe using our Score Alpha strategy and robust risk management. UTI Small Cap Fund, an open-ended equity scheme, will mainly focus on small cap and select mid-cap companies.
The fund will use a blend of growth and value style investing with a tilt towards growth. It will pursue bottom-up stock picking and would have a well-diversified portfolio of stocks across sectors. The fund endeavours to be a true-to-label fund by investing a minimum of 65% of its corpus in small-cap companies and select investments in mid-cap stocks capped at 35%. Small caps offer an exciting space to spot potential future blue chips early and benefit from its growth over the long run.
Let us look at few of our many investment ideas that fit into our investment framework. A leading hospital chain. This company operates one of the largest hospital chains in the country with over 5,900 beds. With healthcare expenditure growing rapidly in the country and India still remaining deficient in terms of healthcare infrastructure, we believe that the company has a better future lying ahead of it. Next company, a play on the formalization of employment. Flexi or temporary staffing is fast catching up in India. With this, the organizations do not have to keep a large bench and can hire based on their demand. This flexi staffing company with excellent corporate governance and better capital allocation would be a winner in the forthcoming years. And many such interesting stock ideas that have enormous growth potential and vast room to expand.
Investors should consider this fund if they are willing to undertake more risk and take exposure in a portfolio of stocks belonging to predominantly the small cap universe. This portfolio has the potential to earn relatively better returns than the broader market. However, to realize those outcomes, it would be necessary to invest with a long-term horizon. So, if you want to be a part of the growth journey of young companies and smaller companies, some of which may become tomorrow's leaders, then consider investing in UTI Small Cap Fund. Our advantage in this often volatile area is our investing process, an experienced team, and a robust risk management framework.
NFO opens on December 2nd, 2020. NFO closes on December 16th, 2020. For more details, please contact your mutual fund distributor or visit the nearest UTI Financial Center or log on to www.utimf.com or WhatsApp chat on 720-808-1230. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.